Good evening. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening, as we're here now on Tuesday, the 7th of January, 2025, just after 6:15 p.m. Central Time. You know, we're running into another indicator day. You ever hear of the January effect? Well, that's one of them. And then there's the effect of the first 5 trading days of the year. We'll cover the first 5 days of the year in a moment here. But let's talk about what we have right now coming up for you. Let me get over here the right way. The Mortgage Bankers Association is going to update their weekly U.S. market indices at 6 a.m. ADP numbers, they're due to come out at 7:15. The market's looking for a gain, but a lot less than they had in the prior month for November. We're looking at jobless claims coming out at 7:30 a.m. That's going to be an important number. We had jolts today, and that made interest rates climb again into the 4.69 level in the 10-year notes. You've got to pay attention to those levels. Go out to the 30-year, and you're over 4.8 in there, and that's weighing on these markets to a degree. Your November wholesale inventories come out at 9. The EIA petroleum estimates will come out at 9:30. They're going to do the natural gas numbers early tomorrow because the markets aren't open on Thursday. When you take a look at API numbers, they came out this afternoon, and you had a reduction of 4 million barrels, but you added a lot of product barrels. And, you know, now the question is that bullish or bearish? Got to think about that for a little bit. So, tonight we're trying to get a bounce from a stock market that got hit today. It started off on a positive note. NVIDIA had their keynote speaker yesterday, address at the Consumer Electronics Show. The market jumped on that news initially, and it was the old buy the rumor, sell the fact. And the market went down about $7, $8. It carried the market because then the tech stocks came down with you on a number of them. In the energy market, we're staying well bid. I'm thinking natural gas here in the 340 areas where I think support's going to try to show up. Most of the currencies, as you can see tonight, are in the red as the dollar gained on them a little bit. So those are things that you've got to watch to see what the market wants to do. But if you get the impression that right now at the beginning of the year, things are just churning around, you could not be more accurate in your statement. It is typical of that. You still go with the trades you can, try to control them, but a lot of people get spit up at the very beginning of the year. And that's because the market's got new money coming in, managers are making different plays, portfolio adjustments they didn't do at the end of the year for whatever their reasons were, and now that is what's going on. So let's take a look. First, on the S&P, if you look at the weekly close only, and this is just the closes, you're still over the 18-week average of closes. Therefore, from my perspective, the bias is still bullish. Now, let's talk. The first 5 days indicator, which again, Yale Hirsch Traders Almanac, very popular. You can Google this, Investopedia it, you'll see. Suggests that if the stock market is positive in the first 5 days of the year, there is an 83% probability of a positive year. You got to take that with a grain of salt, of course, but gives you an idea that the idea here is that where's the smart money moving into? Are they moving in? I've labeled that close for you right here. At this point, you're just barely over that number. Certainly not running away, but over that number. The pattern so far, higher lows on the swing line, but lower highs. You're in the middle of no man's land. The market bumped up, as you can see, 2 days in a row, including today, hitting the upper 18-day average and fell right back. Support's back at 59.13, but you could hurt that indicator by closing lower tomorrow, which would be, including tomorrow, day 1, 2, 3, 4, 5. So that would be it. That's your first 5-day indicator. So how you finish tomorrow is going to be fairly important for people that follow those things. Again, same author, Santa Claus rally didn't work this year. Doesn't mean his work isn't good. I just showed you the probabilities that year, and I did look them up to see if they held up from last year, and they did fine. Higher lows, lower highs against the average. Not much going on there. And in the slow stochastics, you're drifting. You're not moving one way or the other. Interesting chart. When we take a look at the NASDAQ, you've got a pattern here, as you can see, of a lower low, all right? But now you're starting to make lower highs too. So I think this market's got a problem right here. I'd be very, very cautious about it. I think I should have added the red line pointing down there. You're in a downtrend, not an uptrend. Take out 21,897, and I think the game changes on you. I think it starts popping to the upside. I'm going to put back on the 5-day average because what Mr. Hirsch did, he looked at the S&P, but I know he was looking at the Dow. NASDAQ wasn't as popular as it is today. And you're coming in right here where I'm pointing to it. I have the arrow going there. Are we going to be up? Can't tell from this. You're just hanging on by a thread. If the market drops to the Bollinger Band and stays anywhere near it, then no. Your first 5-day indicator is not bullish for the year. Does it mean anything? Again, grain of salt. It's like people that writing what their predictions are in December for the rest of the year. I wish them the best. Some people can do it and hit it. Most don't. When you look at the macro, Russell, fighting a battle now, and it's a bearish battle. You crossed over tonight with the 18-day average getting under the 100. Traders are going to pay attention to this. If it can't get immediately back over it, it becomes a problem for the market, as you're going to get the moving average traders selling into that, and the support comes in at the 200-day average. You are oversold, so it's very important what happens. It's an intra-evening crossover, so we'll see if it's going to hold up. When you look at the 10-year note, you continue to fall. So what's very evident is the market is looking at the overhang of interest rates. It's saying, gee, we're back up near 4.7 in the 10-year note. How can the stock market rally with that? Well, the simple fact is it can. I mean, if you go back in historical times, these interest rates are historically not high. They're still on the low side. However, they are restrictive in this economy. We're used to coming from the zero because of the COVID to where you're at, and the market is fighting with all that. In addition, when you go to certain markets, they're priced for perfection. If you think that some of these stocks don't have price-earning ratios that are in the different indices of 35, 40, and much higher, wrong. They're priced for perfection, and now you're starting to get the downgrades coming in. I saw today downgrades come in Tesla. I saw it come in Apple today by a number of analysts. You got to pay attention to that. Support, the 107 area, support here, 105 area. I don't see anything that's favorable right there. In the dollar index, you're at the battleground. If you get through the lows of Monday and you close under 107.69, you got a problem. You open the door up for the dollar to drop lower. I don't see why the dollar would drop with high interest rates. That's the problem. Why are the interest rates high? Because the economy's strong, not weak. Now, could that all change with getting a series of labor jobs this week and that comes unglued? It most certainly could. We get 2 tomorrow, claims, and we get ADP numbers. I don't know where the Challenger grade, what day that's coming out. And when we come back on Friday, we're going to have the U.S. jobs report. Remember, we have a full day of trading tomorrow. You're not open on Thursday in observance of President Carter, and then you're back on Friday. So it's a strange week on top of that. In the currency market, we keep going back to the 18-day average and failing at that number. Downtrends tend to do that. So far this is a correction in an overall bear market. That's all it was. And the same can be said of the British pound. Now get through today's highs in the market. That could change the game, especially if you closed over those moving averages. Again, from a fundamental point of view, high interest rates don't favor that occurring, but it could. When you look at Bitcoin, big outside day to the downside. So, number one, no trading pattern. You have a higher high and lower low. Number two, it keeps fighting the battle at the 18-day average. I'm going to repeat, these markets have been spinning, but not all of them. Energies have been on the strong side. So this is a market that's even got an embedded rally. So this is good. What's it telling us? Is this market saying that China's economy is going to get better? Is it saying that we're not going to get off pace in the U.S. and we're still going to consume a lot of energy? I don't know. But you've got to think it through that way. the fundamentals don't run the market, in my opinion. They do after the fact, and you look at them, day to day it's the chart action, the emotion, the drive, the momentum of the market. It is still in an uptrend in the WTI, the heating oil, but now you're into key resistance of the 200-day average in the Bollinger Band. And in that gas, I would expect that the 340 to 338.5 zone is where the pros are going to nibble, and they'll probably bail if the market gets under these lows right through here. Barring that, I think they're going to hang in there and see what the market might offer them. So there's a lot coming up right in front of us, and I think you got to pay attention to it. And one of the ways is via our free offers for charting, for our research, for daily charts that are mailed to you with our price counts, with option strategy ideas, spread strategy ideas. They're all here in different ways. So how do you get it? You go to iraepstein.com free offers. You select the offer you want. It's blue. It'll look just like this on the page. When you're finished, just scroll to the bottom of the page, put your name, your address, everything you need in there. I'm talking email address. We'll get everything mailed to you. Another way to do it, just move your cursor to the top up here. If you're on a PC, you'll see the icon. Give it a click. I'm Ira Epstein. You have yourself a great evening. I'll catch up with you first thing in the morning.